Hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be getting you a global perspective on the banking crisis as well as outlook for the US equities. We'll also be talking about the trade setup as we step into expiry day, and we'll also be getting you about a lowdown on the stocks that will be in the spotlight in today's session. Also, if you have any stock-related queries, send them in to us on our live feed and we'll have them addressed by our technical expert on the show. But before we do all that, let's take a look at the top headlines at this hour. Well, Wall Street ends lower with the Nasdaq correcting for a second straight day. The two-year US Treasury yield surges to about 4%, recovering from the banking crisis dip. Meanwhile, shares of Alibaba surge over 14% as it plans to split into 6 units and explore IPOs. Asian markets trade mixed on weak cues from the Wall Street. The SGX Nifty is indicating a mildly higher start for the Indian market. SEBI is expected to clear far-reaching proposals at its board meeting today. Elimination of permanent board memberships, approval of new ESG framework revolving around ratings and disclosures, and more efficient and effective trade settlement mechanisms for retail investors are some of the issues on the agenda. Stocks that we will be discussing on the show: Vedanta, as it announces its 5th interim dividend of 20.5 rupees a share. Shalby Hospitals and also Aster DM are some of the other stocks in focus today. Well, let's now go across to Osho Krishan of Angel One to know what to expect in trade today. Good morning, Osho. Good to have you on the show. Well, we've not been able to sustain that 17,000 mark on a daily basis. As we step into expiry day, what are the key levels you'll be watching out for on the index?
Very good morning, Nandita. Well, looking at the overall technical setup of Nifty has been in a very slender range from almost 10 trading sessions. And still there is no clear direction that whether the market will start moving upwards from here or whether it will fall below 16,800. But the decisive and a very strong consolidation zone that we have witnessed in the last 10 days is that 16,800, 850 is being a very strong support. And on the higher end, 17,100 is being a very strong resistance. So even for today, as we are witnessing the last expiry of this financial year, we might expect that there might be some kind of volatility, but still there is no very much momentum that can be seen in the market. So for today, the immediate range will be of 16,900, and on the higher end, 17,050 will be the immediate resistance. So if Nifty will be able to go or beyond 17,050, then only we can see a range of 100 more points on the higher end. And even on the downside, 16,850 on the downside if it goes below 16,900. But as of now, there is no clear indication or direction in the market, we are likely to witness the same dull kind of a movement. And this expiry is expected to remain an non-event for the day.
Well, the expiry is expected to remain a non-event for the day. Hold that thought, Osho. We'll get back to you, but let's also get on board Seth Freeman, who's the Managing Director at B. Riley Advisory Services, and he joins us live from San Francisco. Well, good morning, Seth. Good to see you after a long time, and I can see that you have a great beard going along. So good to see you.
Thank you.
I just want to get in your thoughts on the entire banking turmoil that has unfolded in the US, you know, after what happened with Silicon Valley Bank and Signature Bank. Do you expect more banks to go belly up, or the deal with the First Citizens Bank seems to have calmed nerves around this whole banking crisis? What's your view on that?
Well, in general, the FDIC has really created some calm. There was a huge crisis when Silicon Valley Bank was in trouble, and it didn't look like depositors were going to have access to their money. And then the government came out, and the FDIC came out and said that yes, deposits would be available, but they weren't bailing out shareholders. This is still a lot of pressure on regional banks. There's a lot of negative sentiment and concern. And today, the government, the Fed ordered Signature Bank clients in the crypto business to get their money out by the first week of April. So there's a lot of concern about regional banks and some of these specialized banks where a high number of deposits that exceed the $250,000 FDIC limit could see very rapid withdrawals and cause another run on a bank.
Right. Let's also talk about U.S. equities. The two-year yield, U.S. Treasury yield, is back above that 4% mark. Where do you see the Dow and S&P heading from here, at least in the medium term?
Well, the Dow is actually holding up better than the S&P 500 or the Nasdaq, because we've got these larger cap stocks, plus not the, you could almost say, contagion of technology stocks and the weighting of technology stocks in the S&P and of course the Nasdaq. So I think we're just going to continue to see quite a lot of volatility, and it's going to be based on where some of these heavier names move over the next few weeks.
Right. Seth, are we really staring at a bear market now, or do you think the worst of the sell-off is behind us, and would you be waiting for the next leg of bull market now?
No, I don't think we're going to see a bull market anytime in the near term. The question is whether we are going to really get into a recession or not. We're getting conflicting news in the sense that we have high inflation. At the same time, we have relatively high employment. And it really, at the same time, U.S. consumers have some of the highest credit card debt and other liabilities. And it's increasingly very difficult and expensive for Americans to buy homes with mortgage rates literally twice as high as a year ago. And the real estate market drives a lot here in the United States, and a slowdown in real estate. And also it looks like we're going to be seeing CMBS, mortgage secured debt, in trouble as commercial building landlords cannot make their payments. And this is going to create a lot of pressure.
Right. Let's also talk about the Fed, Seth. At the last meeting, the Fed raised interest rates by 25 basis points. Do you think that the Fed should have actually waited it out and let the banking crisis unfold before undertaking another hike? Do you think it's a time to actually hit the pause button when it comes to interest rates?
Well, personally, I don't think the Fed should be so reflexive to current news like this. There's a long-term intention to nip inflation in the bud, basically. The problem is, in order to implement the change the Fed is looking for, we are going to also have a displacement in employment. So because it's still employment levels are relatively high. So this is actually the challenge that the Fed faces. We're looking at potentially lower rates, a rate reduction later on this year. But let me tell you, when you have the prime rate at 8% for companies that have to refinance their term loans or facing higher payments, higher interest costs on their revolving lines of credits, this is going to put a lot of pressure on medium-sized businesses, in particular, mid-market sized businesses. We're going to see a tremendous amount of workouts and restructurings of middle market companies.
The Fed chairperson at his press conference had said that, he's in fact hopeful of a soft landing where the U.S. economy is concerned. But do you think those chances are fading now, given the turmoil in banking system globally?
The soft landing is always the objective. Rarely have we actually seen that in my 35, almost 40 years of business experience. It's extremely difficult to calibrate. And the government is talking about the fact that regulations and systems to stabilize the economy have not really kept up with the digitization of money. The fact that money can be pulled out, large sums of money can be pulled out using one's mobile phone instead of having to go to a bank and stand in line or even fill out paper wire transfer documents has completely changed the name of the game. And it's something that's going to take legislative action plus regulatory changes to really have the soft landing the Fed's looking for.
Right, Seth, I'm afraid that's about all the time we have on the show, but I look forward to connecting with you sometime in the future. So thanks a lot for taking out time and joining us this morning.
Thanks for having me.
Thanks a lot. Well, with that, let's go back to Osho and discuss the stock of the day, which happens to be Vedanta for me. You know, it has announced a fifth interim dividend of 20.5 rupees a share for FY23. Now, this is the fifth interim dividend. Remember, the company also benefited from the Hindustan Zinc dividend that was announced a few days ago. Yesterday, if you look at the stock, it did manage to stage a comeback, you know, in late trade. How would you advise investors to play this stock in today's session?
See, overall, the technical structure for this counter is quite sideways because the counter is hovering just above the 200-day SMA. But this being the dividend being a very positive setup for this company, so we are expecting that from here onwards, at least the retails will start attracting, start attraction towards VEDL, and slightly we can see the prices to move upward towards the level of 290. So 290 being a major resistance, so one can expect the prices to go till 290, and one
Right, I think we've lost the audio connection. There's some issue. We'll get back to it. Osho, can you say something? I think we have fixed the audio issue now.
Yes, I was saying about that VDL has been in a consolidation zone, and as of now, what we are witnessing that it is at the lower band of the support zone, 270 being the lower band of the support zone, and from here onwards, the news flow of dividend of ₹20 will boost the price momentum from here onwards, and we can expect that in the near term, 290 can be retested. So the immediate range stays at 270 to 290. If there will be any breach above 290, then we can even witness a 20 point of upside movement in VDL also.
Right. So that's the view on Vedanta. Let's also talk about Reliance Industries. Couple of upbeat brokerage notes coming on this stock. Macquarie has upgraded the counter from, to neutral from underperform, and has pegged a target of 2,050 rupees. It sees consensus EPS cuts, but says that the risk reward is fairly balanced now. And in fact, it believes that new energy and fintech verticals will drive, earnings growth going forward. JP Morgan has also come out with a report. It has an overweight call on the stock with a target price of 2,960 rupees a share. There are, investors do see value in the company, but it says that there are no real catalysts going forward. Whatever catalyst is there would play out from the calendar year 2024 onwards. We know that the FI ownership in this counter is now at a 6-year low, and the stock has been attempting to make a comeback but has been stuck in a range for quite some time. What would you expect the counter to do? Do you expect it to head towards that 2,500 mark anytime soon now?
See, overall, the technical structure is still disruptive because the counter has given a major breakdown from the support of 2,300, because 2,300 was the very strong support for Reliance. And once it breaches below that, then we can expect some kind of sideways or correction in this counter. But what we are witnessing from past 2-3 days, that the stock has been struggling in a very narrow range. So no doubt, Reliance being one of the most heavyweight companies in Nifty, so we can expect a decent move if we are bullish in the market. So one can expect that Reliance can see some momentum only above 2,350. So once it breaches 2,350, then we can witness a immediate upside target of 2,400, 2,460, but that is somewhere where we can see a strong resistance also, because the overall market conditions are not very much favorable as of now. So 2,450 being a major resistance, if it breaches above that, then we can see a very decisive reversal. But as of now, one should go one step at a time, and as of now, 2,350 is the level that one should look upon, and any breach above 2,350 can boost 100 and 150 points of upside in this company.
Right. That 2,350 is a level to watch out for in Reliance Industries. And we had a query on the stock from Ashok Kandukuri. Hope that answers your query as well. Let's also shift focus to the Adani Group of stocks. NSE has sought clarification from the group, Adani Group, on loan repayments. And, yesterday we saw most of those stocks were trading with deep cuts. And we also are getting queries on Adani Enterprises on our live feed. How would you look at some of these counters in today's trading session? Adani Enterprises, Adani Ports, those two counters were the top losers on the Nifty yesterday.
See, technically, anything on these counters will be very difficult to say as of now, because the volatility in Adani Group companies is very huge. Approximately 5 to 7% of daily movement we can witness in Adani Group companies. But on technical front, if we will be having a very specific stock level specific discussion, then we can expect that because we have witnessed the bullish gap to get refilled in yesterday's session, that means that there has been some stagnation or there has been some kind of more correction that we can witness in this counter for the time being. But on the downside, being specific on the levels, 1400 will be the very strong support zone for Adani Enterprises. And once it reaches 1400, then from there onwards, we can expect some kind of momentum or some kind of consolidation in the counter. But it all depends on the news flow. If there will be any positive news flow, that can be triggered as a very positive momentum for the short-term traders. But if there will be any news flow on the negative side, then we can even witness that the support of 1400 can be breached on the downside. So as of now, one should keep a tad on the 1400 level, that if there will be any cut towards 1400, then one should look to accumulate this counter.
Right, so that's the call on the Adani Group of stocks. Let's also talk about Shalby Hospitals. You know, there's some bit of news flow on this company. Purinju Veliath-owned Equity Intelligence has bought somewhere around 0.5% stake in the company. You know, if you look at the shares, they haven't done all that well this week, down about 5% or so. But this bit of news seems to be positive for the counter. Would you expect the company, the stock to rather, snap out of the losing streak and clock in some gains in today's session?
See, as of now, the stock has been in a very downtrend, but looking at yesterday's setup, we have seen a lot of a huge volume based in this counter. So we might see some kind of consolidation or some kind of positive uptick, but the turnaround from the reversal or the turnaround from the ongoing negative terrain will be very difficult to say as of now. The only level from where we can see a reversal will be above the levels of 125, 128. So till it does not sustain above, or till it does not go beyond 125, 128, one should remain sidelines. Only after 128, one can try to accumulate this counter for the immediate target of 138 levels. So as of now, one should keep this stock in their radar. If there will be any positive construction on technical chart, one can definitely look to accumulate, because overall the stock has been in the oversold region. So from here onwards, positive news flow can give a boost to this counter also, but one should be staying stuck with the technical setup. So 128, 125 will be the range from where we can start accumulating this counter.
Right. Let's also shift focus to some queries that are trickling in this morning. Satya CK has written in and he wants to know your thoughts on Readington. He wants to know whether he should be buying this counter for the medium term. If you look at the stock, it has lost somewhere around 12% on a YTD basis now. Do you think this one should use these dips to buy into the counter and wait for the medium term now?
See, overall, if we will be seeing the technical chart on the weekly time perspective, then the stock is very strongly placed at the breakout neckline, which was approximately around 160, 158 levels. So from here onwards, even last week was also very strong closer for Readington. So if there will be any follow-up buying, if there will be any closer for this week above 170 levels, then that can be boost. That can be seen as a very strong setup for this counter, and one can expect the boost to continue towards 185 in the short term. But one should wait again. One should again wait for the closing levels of 170, because even if it does not go beyond 170, then we can see some kind of time-wise correction in this counter, because price-wise correction we have already seen. Now the time-wise correction can be seen in this counter. So one should only focus above 170 levels.
Right, focus on this counter above 170 levels and expect a time-wise correction now. Next query is coming in from Mohit Anand Bhatia, and he wants to know your thoughts on Indiabulls housing for the next 3 months. He's bought these shares at a rate of 140 and incurring quite a bit of a loss as it's trading below that 100 rupee mark now. What would your advice be to him?
See, as of now, this counter is being in the oversold region and currently hovering just above the 52 weeks low zone. So as of now, what we can expect that the immediate support is near around 88, 89 levels. So if there will be any decisive up move from these levels, then we can see a short-term relief from the sell-off. But overall, the structure remains sideways to negative. So one should try to exit on any bounce towards 105, 110. On the downside, we are expecting the fall to discontinue at the levels of 88. So if it happens, then one should try to exit from their positions on any rise towards 105 to 110.
Right, exit on bounce. That's the call on this stock. Let's take up the next query then. Krishna Reddy Kohli has a query on Mazgaon Dock, and he holds those shares at 770 rupees a share. So he is, making losses at the current juncture. But over the last 6 months, this counter has seen a rally of somewhere around 30-odd%, even though on a YTD basis, it hasn't really done all that well. Would you advise him to sell on rally as well?
See, Mazdoc has seen a technical breakout from the levels of 630-35 zone. So as of now, it is hovering just near the neckline of the breakout zone, and also on the daily chart, it is hovering just above the 200-day SMA, which is expected to be very strong support for this counter. So one should stay invested in this counter and should keep a strict stop loss of 585. If it breaches 585, then we can see a further correction in this counter. But for those who have already invested in this company, should take more risk of, let's say, 50 points, 50 odd points from here onwards, and there can be some kind of reversal which can give an immediate boost towards 700, 710.
Right. Let's also get in a view on Emphasis then. Aarti has written in and she wants to know your thoughts on Emphasis for the long term. Yesterday, the stock was under pressure, down about 4% or so. And mid-cap IT, I think on a whole, has not been doing all that well, given the concerns, the recession concerns in US. How would you expect, or how would you advise investors to play some of these mid-cap IT stocks now?
See, Emphasis has given a major breakdown from the levels of 1900, and from there onwards, it has been going down on everyday basis. So as of now, on technical basis, we can expect the support to stay at 1480 to 1500 levels. So if there will be any halt, we can expect 1500 to get tested in the very short term period, because looking at the overall technical setup, we have seen a strong fall, and because of which the counter has been into the oversold region. So from here onwards, we expect that the downside should be limited, but looking at the overall momentum, one should not be freshly enter into this counter. If you have the counter, then better to hold with a stop loss of 1500, because if breaches that, then we can again witness 200 point of downfall in this counter from there onwards. So one should stay invested, keeping a strict stop loss of 1500, and on the higher end or at around 1900, one should try to exit their positions also.
Right, so that's the call on Emphasis. I'm afraid we're running out of time, so that's about all the time we had for queries today. But before I let you go, Osho, leave us with some stock recommendations for the day.
The first technical pick which can be seen for positional basis for, let's say, today and tomorrow is Torrent Power. Torrent Power has seen a strong reversal in yesterday's trade. It has almost made a bullish engulfing pattern on the daily chart, and the reversal has been made from the 200-day SMA. So one can look to accumulate Torrent Power on any dip towards 505 to 508 zone, keeping a strict stop loss of 490. The immediate target that we can expect in Torrent Power is 528. The other technical pick is from the pharma sector. Zydus Life is looking very lucrative as of now. Zydus Life has been consolidating in a very strong consolidation zone from past 3 to 4 weeks, and it is about to give a breakout from the current consolidation. So any dip towards 480 to 82, 480 to 482 can we look to accumulate this counter for immediate upside target of around 498 to 500. And even for short-term traders, one can keep a strict stop loss of 468.
Right, so those are the two stocks to keep on your radar today. Well, with that, Osho, thanks a lot for taking out time and joining us this morning and addressing all of your queries as well. Well, with that, we are completely timed out on this edition of Morning Trade. So it's a goodbye from me, but don't go anywhere, because coming up next is Opening Bell.